Welcome to the Family Office Sherpa podcast. I'm your host, Shaun Parkin, founder and managing director of Holt Road Investments. The aim of this podcast is to provide practical and implementable advice for those looking to build, manage, or service a family office. This is not, however, investment advice, so please check the disclaimer in the show notes. In this episode, we are asking the question, how do family offices manage uncertainty and fear?
This is the Family Office Sherpa.
Now, like Frank Herbert says, fear is the mind killer. And in moments of volatility and uncertainty, like we're seeing at the moment, not to date this podcast too much, but I've seen family offices navigate fear not by avoiding it, but by being structured, patient, and purposeful. So I thought it might be a good idea to go through what I have seen those types of family offices do during these uncertain times. So we'll go through each single one, and then at the end, what we're looking to do is trying to get some sort of action plan in place. So first thing, have an investment policy statement and purpose document. I know I sound like a broken record here, but those are the fundamental parts of establishing the family office. And that's really what Holt Road helps people with. So having a well-defined investment policy statement and a clear purpose, and what that does is acts as your compass during these volatile times. It's great to have stuff written down. It's great to be able to point to something and say, this is what we said we would do when this happens. It removes some of the noise. It also makes everyone focused on the purpose here. And we are family offices. We're not dealing with client calls necessarily, unless, obviously there's clients in terms of family members, but ultimately we're not looking to manage outside money and the fiduciary components of that. So having clear, defined purpose and policy is not necessarily a requirement for family offices to be called a family office, but I believe it is imperative to have those because, like it says, it acts as a compass. It acts as not a blanket, but certainly something that gives you some idea around what you should do. Revisit them, but don't rewrite them. And that's really, really important. Just because the markets have changed doesn't mean you need to go back and say, well, we're going to throw all this out. So like I said, if there is no point in having an investment policy statement, let's just call it an IPS from now on, if you throw it out the window as soon as volatility, uncertainty spike. It's exactly this scenario that we have them for. We build guidelines on things like asset class definitions, why we have them in the portfolio, and you'll see with price discovery during these kinds of volatility in terms of public markets being a lot more noisy because they're priced continuously, where private markets you have some lag, but they're all the same. It's all part of a portfolio. So you've defined why you have them. You've defined your risk tolerance and you've defined your total return expectations. This is a great moment for people to understand people's tolerance for loss. When markets are all going up and things like that, people are, yes, I'm a risk-on investor. There's nothing that narrows the focus like a sea of red, and there's nothing that, I guess, shows people's ability to handle losses. So I think this is a really good time to have this investment policy conversation if you haven't already had it. There is an investment philosophy within the investment policy. That doesn't sound like a rhyme. And that should be your central philosophy. It doesn't matter, or it shouldn't be impacted by the prevailing markets. So this is another good reason why you should be reviewed at least once a year, at least to revisit it. Next thing, good advice. Get good advice across all asset classes. Lean on trusted advisors for their perspective. I don't provide investment advice for this specific reason because you need those with deep research, firepower within trading, execution, things like that. People that are solely focused on investments. And that's why finding good partnerships here is so important. Get good advice across all asset classes and lean on them during these periods. You are intentionally diversified. So you get diversified quality advice across things like public markets, private, alternatives, get the balance right. But this is an excellent time to, I guess, see if people are actually who they say they are. You should be hearing from your advisors during this period. That's a simple fact. If you haven't heard from them, it's not necessarily just their issue. It could potentially be your issue as well. Maybe they haven't been told to, expect this kind of high touch. But I would say that every advisor that I work with and the families that I help work with, we are proactively getting them to give us some feedback around what they see. And we're not looking for predictions here because no one knows what's going to happen, or no one can predict anything. But just to understand what we've got, what we're exposed to, and getting their trusted advice. So, next one. You should have a strong internal decision-making process in place. As mentioned in the previous episode, you need to avoid decision-making paralysis, especially within markets that are moving like they are. Now, we're not talking about we need to trade. We're not talking about we need to do this or do this. We just need to have a decision-making process in place in case we need it. So, and you don't let fear dictate that, because that's what a process is for. It shouldn't be from the hip. It shouldn't be made up as we go along. We should be relying on the process that we've put in place for this. Clarity beats panic. So clarity of your investments process beats panic. I've been through a few of these periods, and it's the ones that have comfort in their process that tend to do the best out of these sort of situations. Having structured decision-making frameworks and maintaining the discipline of the office. Okay, next one. Strong investment committee. So like I said, I sit on the investment committee for family offices, and sitting within those investment committees that know the role of that IC, guiding, asking for feedback and managing, monitoring the efficacy of our counterparties and our investment managers within this period. I would say the cadence probably increases if necessary. It's not always necessary. Some people are saying this is noisy. We're long-term investors. We want to be clear around what we're exposed to and things like that. But this is markets. This is what we invest in. So I think having an investment committee that understands its role as a governance structure and allows the managers to manage, I think is really important. And again, it brings confidence and consistency. The next one, strong scaffolding. I've mentioned scaffolding in a previous episode. If you want to listen to that, I think it's worthwhile within this sort of context. What the scaffolding sort of alludes to is support. What's the support network around there? So frameworks, support structures that are holding everything up, especially when it gets a little shaky, right? Lean on your trusted partners for advice. If you're an office that hasn't seen this before, and not everyone has, you should have people within that scaffolding network that understand and want to understand how to speak to the psychology of this kind of thing as well. From past experience, there's nothing like past experience. As they say, history doesn't repeat, but it often rhymes. And we've been through these cycles before, and having people to say, well, this is what we should look for, this is the psychology of it, can be incredibly helpful as part of your scaffolding. Another one is accurate reporting. I can't stress this enough. And I, again, kind of like the purpose documents in the IPS, I do sort of belabor this a little bit, but having an ability to understand what we have and what we're exposed to at any point in time. We're not talking about, we don't need minute by minute data sets, but, having an idea around what we're exposed to at deeper layers than, we've got this much in equities and this goes fixed income or whatever. Having some granularity for often complex portfolios is really, really important. So accurate reporting. If you haven't got accurate reporting, this is an excellent time to say, what don't we have? Where were we scrambling around trying to figure out what we're exposed to? What do we know about our operational infrastructure that needs assistance with? So again, that's a really important piece. And lastly, we've talked about this before, but one of the greatest things about a family office is it's a long-term patient capital investor. Well, a lot of them are. So that's the superpower that we have. Hopefully, we don't have liquidity crunch. We do have an ability to move assets in and take advantage of opportunities and all these sorts of things and be patient around it. This is where, the ones that are not as risk managed, things like leverage, things like understanding the actual investments that you have and the liquidity profile of the portfolio in total. Again, that accurate reporting piece, that's where this becomes problematic, but patience is the superpower. So staying invested through storms where, again, just an understanding of downside, loss tolerance, for want of a better term, is so important as well. So I thought it was, I don't want to date this episode, but obviously the marketplace is uncertain and there is a level of fear there. I think for family offices, this is a time to, rely on the structures that we try to build into place here. Things like scaffolding, things like taking advantage of your superpower, having the reporting in place, all these sorts of things. I think this is a good conversation to have. I think that if anything, and we kind of found this with COVID as well, this shows you where the gaps might be within the office. And again, this is where Hall Road helps a lot of family offices in terms of getting this structure in place. So hopefully that's helpful. Hopefully I'm not creating more noise. Hopefully it was of interest. If it was, make sure you set the little alert for it, rate it. If you want to put a comment, that'd be super cool too. If you're looking for more family office insights, which how could you not be sure to join the thousands of other subscribers to the Sherpa newsletter, so the Family Office Sherpa newsletter, which you can subscribe to on hallroad.com.au. You can see an example of them there, see if it's for you. If it's not, please don't subscribe. Just you listen to the podcast. It's a newsletter that goes out every 2 weeks and it's in its 6th year. If you're looking for assistance in establishing your family office, then feel free to reach out to me on LinkedIn. A lot of people get to me on LinkedIn. That's always nice. Or you can email me directly, Shaun, so SHAUN at hallroad, that's HALLROAD.com.au. Until next time, thanks for listening.